morning eagles. Who's soaring over the yen? Okay, so I just want to emphasize one more time. When I thought the yen might be turning good over 113, Blake hated it. Took advantage of it in euro yen. Monday, Grega was here, talked about a 110 handle. Not quite there. Biggest two-day drop in quite some time in the yen. So if it wasn't an outright short in the yen, there were euro yen shorts. There were many ways to skin the cat here. Here's the euro yen. Okay, so there were pips on this trade. At the minimum, let me just say this. If you weren't short any of the yen crosses and you weren't short the yen, how about being grateful? You need to log out, Ronnie, and then come back in. People can't speak in here anyway. So if you weren't on the right side of it, you should at least take solace that you weren't long US dollar yen or long the crosses, which if you're on Twitter, you're on social media, there were a lot of people talking about the yen making a move up towards 116, 118. Even one of my guests, Giuseppe Bazil, he got his first target at 113. I would say that it broke his fib sequence now. It'd be interesting to see what Giuseppe is thinking now. And with that being said, here we go, guys. ForexAnalytix subscribers did quite well, and you probably did okay just being here in face as well. So congratulations if you took advantage of one of the biggest drops in the yen in a 48-hour period or 72 hours that we've seen in a long time. So here we are on support. I'm going to be handing it off to Stelios. He wants to talk about Nordics in a minute, but I just want to update you on an idea that I gave you yesterday on Turnaround Tuesday. Here we are. Okay, I said fade the Dixie, fade dollar strength. My preferred position was the long side of euro pound. It was down here yesterday. So if any of you guys accumulated here, I was talking about a stop at 760. So you're long, let's say 15, you have 50 pips here. Take partials here. Okay, JT. So give me a Y if you're with me. If you went long euro pound yesterday, I'm recommending taking at least half off there and putting something in the bank, tightening up your stops to a profit stop at the most, a break-even stop on the remainder. Everyone with me? And I would do the same with the Dixie. Okay, wherever it is. Also, the other day, I was talking about I thought gold would make another new high. We were in here. That's manifested. A lot of people saying it might be a third drive. I want to see it do more work. I don't like the RSI reading being this high. I believe this is what, the 4 hour, the 1 hour. Yeah, it got into the 70s. There's some divergence, but I would let it do some work. And the oil, although it achieved and surpassed, talked about another high here when we were here, but it even exceeded my expectations. I don't think I'd be long up here anymore, but I'm not quite sure about the timing of being short. There could be a scalp here if you're willing to risk a buck. We have exceeded targets of 62.80 that we have. Steve will probably cover that when he's on deck, but I want to get the mic over to Stel. Anyway, the most important message I had was take partial profits on euro pound here. Okay, you want to keep a piece on in case the objective for the top of the wedge, which was up here. around 89, 80.
Don't let Stelios talk. He's just going to talk his book. Next thing you know, he's going to be talking about GoPro and all sorts of crap. And
Twitter, yeah.
Twitter. Buy whatever I'm buying. Yeah, let me go ahead and tell you what to buy after I bought it.
You know, I try and help the Twitter position by spending a lot of time on there. Think maybe he'll get a bid on Twitter. But you know what? Twitter's rallied pretty good, but what hasn't?
Stelios, I'm just harassing you.
Del, do you want me to pass you the charts?
I actually don't have any charts to show. I just wanted to very briefly talk about the Sweden and Norway because we had some developments today.
Okay, and you know, we are coming up to the Olympic Games, so Winter Olympics. So talking about countries that have a lot of snow, I think, is very appropriate.
Yeah.
Okay.
So I'll start with Sweden. Today we had some data which was strong. Industrial production came in at 0.9 month on month, 6.5% year on year. It's on the strong side, but most importantly, we had the minutes of the December monetary policy meeting, where they held rates at -0.5%. I still can't believe they're at negative rates, but still. But the tone is changing a little bit, and they are reiterating that they are expecting to start hiking rates in middle of 2018. This is not the first time they've said this. They said it in the last meeting as well, but still, you know, they're reinforcing it, and I think this is happening, and probably even earlier. The thing to note is that they do note that inflation is now at 2%. It has gone from 0% to 2% within 2 years. So the monetary easing has been working. Now they actually said in the minutes that yes, we are there, but it's taken years of monetary easing, so we're not going to rush and do something. But you know how these things are. You know, inflation, when it starts picking up, and it's picked up in Norway as well, you don't want to be left behind the curve. And central bankers always know that. It's not, you raise rates and you harness inflation straight away. Yes.
Aren't they already quite a lot behind the curve?
I agree, absolutely. So the whole tone of the minutes is a little bit more on the firm side. So they also discussed the housing market, that they're seeing a slight slowdown, and they think that's good for the economy, which is actually right. Because the last few years they've seen incredible house price rise. So this all together combined is a pretty good picture, in my opinion. Definitely does not warrant negative 0.5% rates. So that's the one thing that happened today. The other thing was Norway CPI is finally turning. If you remember, a year ago, year-on-year inflation in Norway was nearly 4% or 3.5%. It has dropped, but now it's picking up. Two reasons for that. One, oil, as we all know, has been climbing, and this slowly feeds into the inflation numbers. But most importantly, I think in the whole of 2017, the kroner was depreciating quite frustratingly, because I personally thought it shouldn't, but it was. So that now starts to come into inflation, and we're now back up to 1.6% year on year. Their mandate is 2%. So, they're getting there. And we have to remember, this is the only problem that Norway has had. Only major problem is this dropping inflation. Now it seems to be turning. Last month's reading was 1.1, now it's 1.6, and oil keeps going higher. So, this probably has some legs to go. And if inflation hits the 2% target, I personally think there's nothing to stop them from hiking. They have said in the previous meeting that they will probably start hiking mid-2018. I fear it's going to be earlier than that. So that's pretty much it. Just wanted to note that down, because not many people trade the Nordics, but it's always nice to look at them, because they can be, like Blake has said many times in the past, the canary in the coal mine. Something starts moving, and then things happen. So just something I wanted to share.
Very nice. And hey, good morning, Stelios. Hold on really quick. I'm gonna say something. Great. Hold on. Just hey, well, I know I was harassing you about the krona and everything, but you've been really bullish the krona, and rightfully so, and especially Norway's krona, and it looks extremely, and it's been trading extremely. The U.S. dollar, Norwegian krona, has been trading extremely heavy. The Norwegian currency has been extremely strong, which is just going to be a tailwind should the U.S. dollar continue to get punished here.
Yeah, I mean, you know, it's been frustrating in 2017 because I had been bullish the krona and it weakened. But you're right, now it's starting to go. I think it's the beginning of a pretty decent move because, as I said before, I don't see what the problem is. You know, why Norges Bank and to a lesser degree Riksbank should not be hiking. I think they should be. So yeah, you know, I'm riding it. I've got Norway on, and I'm sticking with it.
Is that your Twitter feed? Just saying so.
Yeah, we can see your screen.
Dale.
That's his. There you go. But you know what I'm going to do? I'm going to take over. How about that?
Sounds good.
All right, I'm going to take over. But still, as we can continue to talk. I know you got to leave here in a moment. But with this Norwegian krona, and I'm going to pull it up right now, and we can talk about the Swedish krona as well. This is, I know you were talking about it was a little bit of a frustrating 2017, but we couldn't even get a lift here. And when I look at like the U.S. dollar Norwegian krona technically, all I have to say is these lows that were just hit a couple of days ago right here, if that, you know, or last week, if that breaks, we're probably going to see 7 again. I think, or 780, excuse me, down here again.
Yeah, I agree with that. It makes sense.
And Sweden's the same way. I mean, you look at
Blake,
yes.
I think that the USD NOK has been a very painful trade for many. When it finally, after a very prolonged period, managed to break below the 8 area, which was holding for a long period of time, I bet it trapped a lot of people being short. And after cleaning them up and, you know, taking us back above 8, I think that perhaps this time it's really prepared to do a much longer term move to the downside. That's how I view it.
Yeah, and you know that's going to go along with the theme, I think, going into 2018, that we're probably going to see an overall weaker dollar, and you know, you're going to see the euro outperform, and therefore the Nordic currencies will probably perform even better than the euro, and that's when you take like the euro. I think you guys, and I'm not mistaken, you're short the euro Norwegian krona, or you're looking to be?
I am short the euro Norway, yes.
Okay. Personally, I'm only short against the USD, and as I've said many times, Blake, and indirectly you mentioned it now, I'm usually looking to be long something against something I believe is going to be weak. And since I maintain a bullish bias both for the euro and the NOK, yes, I'm more bullish than NOK, but why not just be against the US dollar, right? So
right.
At least that's my thinking. That's why I'm not short the euro NOK and really not looking to be. I'm perfectly content with just being short against the USD.
And you know, I look at like the euro Norwegian krona, and this really illustrates the fact that I think that the Norwegian krona is going to outperform the euro. Just with technically, if you look at this weekly chart, we had a false breakout above the highs, really a lower longer term high, false breakout, and it looks like, so from here on out, the Norwegian krona, at least for the next couple of months, probably will outpace the euro. You know, most of the time, you know, it's nothing comes down in a straight line, and you know, but I would think yes.
So sorry to interrupt. Just one note. That false breakout was actually in the last 5 or 10 days of the year. You know, the very liquid time. It was like a perfect stop hunt, in my opinion.
Yeah, right. There was a lot of that going on, and there normally is around that time of the year. So Stelios, I know you got to go. Thank you so much for your coverage of the Norwegian krone. I really appreciate it.
No problem. No problem.
All right, and have a good one. I'll cover a few things before I turn it over to Steve here in about 10-15 minutes or so. But Dale, I heard your comments earlier about the yen. Yeah, the yen turned decisively lower. We are below the 200-day moving average. If you guys didn't catch the news overnight, Chinese officials are saying that they view U.S. Treasury as less attractive, and basically these are comments that are coming from Chinese officials or people that are familiar to the situation, that that China is looking to buy less treasuries. I mean, that, you know, without reading the entire story to you, it's really in a nutshell. You're taking the biggest purchaser of U.S. Treasuries and saying they look less attractive. This is a direct, in my opinion, a direct swipe at the United States, but more importantly, it is preemptive towards what looks to be heating up a trade war between the U.S. and China. So obviously, bonds have gotten killed. And, you know, it's really interesting, and whoops, that's not what I wanted to pull up. Let me get over the 10-year. Where did my 10-year there? There it is. Here's the 10-year breaking lower. You had Bill Gross yesterday making comments that some key supports were broken on the 30-year, on the 10-year, and the bond market looks extremely bearish. Now, you got bonds going down, yields going up, dollar yen going down. That is a now it's really a divergent dynamic of what, you know, we're typically used to. But the fact of the matter is you're starting to see some massive U.S. dollar selling, and that has come through completely through the market, and which prompted our pattern in play on my New Zealand dollar to get stopped out. You know, and I actually reshorted the New Zealand dollar this morning at 72.15. As soon as I got up this morning, I was like, oh, what's it doing up here? And I sold it up here, and I already got out of it, but I'm trading the Kiwi short through other means at the moment, through other crosses, because I'm not really too sure what to do with the dollar per se. But the dollar is extremely weak, and you're seeing it, you know, like I said, you're seeing it come through the entire market, whether it's the euro dollar racing back up to 120. The pound's just kind of stuck right now. The Aussie lifted, the Kiwi lifted, the dollar Swiss reversed really hard. The dollar Canadian continues to stay relatively under pressure. And in my opinion, you got to be very careful with dollars at this point. I am still short the euro yen. It came within 10 pips of, I had a limit order at 133.25. I came within like 10 pips of my limit order. It didn't get filled, but I'm still short. I actually removed that order already because I am expecting a lot lower levels. I was just looking to take some profits and then reshort. The dollar yen at this stage in the game, now that we broke out of this bearish wedge, we're below the 200-day moving average. We cleared the 112 level. Any rally towards 112 is going to be seen as an opportunity to sell, in my opinion. So I'm patiently waiting for any type of rally. I had orders all over the map last night trying to sell at 113. I never got hit because, as you can see, we just, you know, slid. I had orders to sell up here, but we never, they never got tripped. And now, you know, you got to think about people like myself, or, you know, a lot of North American traders. They're really behind the curve now, and they're going to look to sell any rally back towards 112. And I know I am. I know I'm looking to establish some positions there, if I can get some. And so you got to think about that. For those of you that happen to be still long some yen. And by the way, I was short Aussie yen and New Zealand yen and Euro yen overnight, and I closed the New Zealand and Aussie yen last night before I went to bed.
Nice look, Blake, and nice.
Thank you. They've paid me pretty well, but you know, getting up this morning, when I looked at the quotes and I saw the dollar yen trading below 112 at 111.40 or wherever it was when I woke up, I had to do a double take. I'm half asleep and I'm looking at my phone, walking over to the coffee maker going, is that right? did we really drop, 100 pips overnight? And we did. And now there's a lot of people that are doing the same thing that I'm doing, is you're getting up and you're like, man, I just missed that move. And there's a reason why that move happened. It wasn't a stop loss move. It did trigger obviously a bunch of stops, but it wasn't that wasn't the catalyst. The catalyst was this news out of China. And now you got traders that are looking to, that are probably wrong-sided, that may have, remember, yen is extremely, extremely leveraged going the other direction, meaning the market was very bearish yen. The market is expecting this move, and they're getting the opposite. And so now you've got traders that probably have stops, layered through here, definitely through here, that are long position long, expecting it to move higher. Now it's moving lower. They're like, oh crap, I now have to get out of some of these short yen trades on any type of rally. Because you think about positioning in the market, it's not just trading 100,000 yen. No, they're trading hundreds of millions of dollars in yen, and you've got positions going the opposite direction now. They're going to have to let some go on any type of rally. So any type of rally, I'm looking to be a seller. That's why that knowing the market was going this direction and knowing that their stops are down here, any type of rally I'm going to try to take advantage of. And so, hey, let's hope we get a little bit of a bounce in risk appetite, and let's hope that the dollar yen or some of those yen pairs bounce a little bit, so we can buy some more yen, because that's there's many of us that have missed the boat, myself included. Even though I've got yen longs, I don't have as much as I'd like. So anyway, that's how I'm feeling about the yen right now. Also, something that we should pay pretty close attention to, if you guys, and this is a good point made by Chi in our chat room. And for those of you that aren't ForexAnalytix subscribers, this is where I'm at all day. So if you kind of want to know where you can talk to me all day, I'm right here. Okay. This is where I'm at. This is the ForexAnalytix chat room. You can see there's a lot of us. There's 90 of us chatting right now, or 89 of us chatting. You guys are on Jumbotron, so you guys can say hi. There's Simon. Hey, there's a chat. Hi, Mom. That's funny.
You wear your shades in there too, Blake? Or
I do. Apparently, I got my shades on. But Chi, who's right there, was just there. He said, I can't believe people are so bearish equities. We haven't even. There's Steve. I'm gonna go. I'm gonna move this so I can show charts. But if you're a ForexAnalytix subscriber, you have a semi-annual or annual plan, you could be part of that. And if you don't, you can still, when you're on trial, you can view the chat room. You just can't interact. Just so you can see what it's like. One of the things that I want to point out regarding the NASDAQ is, and this is something that she brought up, the NASDAQ hasn't even retraced 38% retracement of basically 24% retracement rather of the move that happened, well, this year. So if you take where's the first day of the year, it's basically right here, but you can take actually the very low that came in on the the last trading day of 2017. We haven't even retraced 24%. So before you get super bearish equities, I think you got to be really careful here. I mean, you look at the S&P. I mean, we've barely seen it. I mean, there's a 24% retracement in the S&P. The market is not reversing, guys. The market is having a slight hiccup today. Do I think the Chinese news overnight is potentially a catalyst that can reverse the flows in equity markets? Hell yeah. But that doesn't mean that you look at how well bid the stock market is right now. So I'm going to tell you the same thing that I told you yesterday. Before you get really bearish equities, make sure you look around at exactly what's happening. It's always been rotation, 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 rotation. And I'm talking about equities because it does affect what we do here. If the S&P is going down, is the NASDAQ going up? Is the Russell going up? Are transports going up as the S&P is going down? If the S&P is going up, what internals are showing sell signals? You got to look for the broad markets being sold, not just a couple of little fragmented pieces of the market. So try not to be too overly bearish for those of you that are looking at the markets going, this is it, the top is in. I don't know about that. I'm questioning these moves as of right now, which means that if we get this bounce in the S&P, which probably is going to happen because it happens every day, if we do get a little bounce in the S&P, will that allow for the dollar yen to rally to 112 or 111.80 or 111.90, where I'd be a buyer or a buyer of yen or a seller of dollar yen? That's what I'm really hoping for. Anyway, guys and gals, I'm going to leave the questions to Steve. I'm going to pass it over because we got import prices coming out here momentarily. I got to be around for that. So Steve, are you around?
I am around, Blake. Just a fast, mostly fundamental question about the issue you mentioned about the Chinese statement. How does it look to you that the larger owner of treasuries is talking down treasuries? Isn't that kind of a self-destructive policy as well? I mean, obviously, floating losses or whatever, we all know how they're buying, treasuries. I mean, they're using the surplus, etc. And of course, they're buy and hold in nature, so they don't care about shorter moves. But
hey, Steve, when I was on with Adam Button about a month ago or two ago,
yeah, it seems counterintuitive, doesn't it, Dale and Blake?
Yeah, misdirection. They said that they were buying bonds, and we did have a nice, so they could distribute them. So you're right. I mean, it could be misdirection. I think aren't we close to completing the first wave down?
Is it shooting your own foot basically?
Yeah, it feels like it, doesn't it?
It does, but remember, this is about a trade war potentially starting, so they're using what they can as leverage.
That's true too.
You know what I mean? So we'll see how it all develops.
And as we know, it's not that they're like a fund and they intend to close their positions and take losses. They're obviously buying them to hold to maturity. So to be honest, we have to take that into account as well.
Yeah.
Anyhow, we have quite a lot of things to talk about in the markets. Have a great day and good luck today.
You too. See you guys. Bye-bye.
Okay. See you, Blake.
Okay.
Thank you.
Okay, guys and gals, we have a lot of things to talk about today. I really almost don't know where to start from. I actually know where to start from. I'm not sure how many questions I'm going to have the time to take because, we've been seeing a lot of things and we've been talking about a lot of things, and we obviously got a lot of movements happening today. So let's briefly go over them. Yesterday, when we were testing 92.60, I actually pushed, an intraday update on the DXY quite early, saying that, be careful, this is an important level we're back testing at the moment, and we might see a reaction from there. Don't forget that this is also, let me draw it here, although you can more or less see it, this is also the neckline of this head and shoulders formation, which we back tested. And, obviously, also the first real area of resistance that we would find after this rebound. The fact that the DXY spectacularly failed here, if you see, this is a bearish engulfing. Keep in mind that for engulfing candles, you only care about the body, you don't care about the wicks of the candle, right? I'm just saying that because you shouldn't be confused. Having to do with outside and inside days, we care about the wicks as well. Having to do with engulfing days, we don't. So this is a bearish engulfing that is manifesting from exactly retesting this neckline. I don't need to say more to explain that. Obviously, this is a very, very strong rejection for the DXY. A lot of these, a big part of this move has been, as Blake showed, the USD yen. And let's go to the USD yen and see here. This is not a good looking one, but it's definitely can definitely be seen as a head and shoulders formation. The neckline is somewhere at the 111 area, which is also the 50% fib. To make a long story short, we've said plenty of times ago, and I remember having the conversation with Dale that day that he thought that there is a chance we will move higher, and I told him that, listen, I'm neutral having to do with the USD yen, but I can tell you one thing for sure: as long as we remain below this descending trend line, I cannot possibly be bullish. So being neutral, in my opinion, was the right thesis to have. Blake, with his intuition, was spot on. He strongly believed this move is going to be lower. For me, the 111 is the area that's going to tell me if I should be, bearish or remain neutral. Because if I see a break below the 111 area, that's going to be a very bearish development in my mind. Can easily open up the door to another retest of the 107 low there. Even if we take a measured target of this as a head and shoulders formation, that's a perfect target. You see this? It perfectly coincides with the low. Perfectly. There we go. 107.20 would be, let's say, a head and shoulders target. 107.30 is that low we had in September. So I think that's where you should be looking for. That's all I have to say about the USD yen. Now, I got fortunate enough to initiate, if you remember 2 days ago exactly, I informed you about my new positions that I actually established while Blake was speaking, so they were like freshly made. I went short the Aussie yen at 88.72. I went short the Kiwi yen at 81.10. I was short gold. I was short the Aussie USD, and I was even short the SPX. Yesterday I wrote in the chat room, and that's why we've told you many times that being here once per day is one thing, but if you really want to be up to date with what we're doing, there's only one way. Yesterday I had taken profits in half of my gold position, and today I got stopped at break even in the other half. To be honest, because I did take like $5.50 of profit in that short, but seeing the move today, I'm not really happy that I got stopped at break even for the other half. I'm really thinking of re-establishing some kind of short position here. I'm really not convinced by this break to new highs today. And even if we see a move higher, I don't think it's going to be a lasting one. Despite taking a very minimum loss of 0.18% in my first attempt and taking a bigger profit this time, I really want to be short once again gold, and quite soon. So this is one position I'm still going to be pursuing. Having to do with the Aussie USD, I have to say that I don't like the reaction today, and I see the probability of one more high, but I'm still barely in the money. I'm going to consider what I'm going to be doing. But I also closed half of my positions yesterday at Aussie yen and took a decent profit here, and I'm holding the other half because it's working out nicely. Same with the Kiwi yen. Same deal applies here. For Kiwi yen, by the way, we're currently testing important, as you see here, we're currently testing important confluence of supports. It's this ascending channel. It's also the 61.8 that we had on the way up. It's also these highs that we had a few days back, at the end of last year. If I see a breakdown from here for the Kiwi yen, then the next area I'm going to be looking for is the 79.40 area, which is also the 200 DMA and some horizontal support resistance area, supply demand, you can call it as you like. These positions are moving, so I'm going to be holding onto them. Now, having to do with my SPX short, I was thinking of adding yesterday near the highs. I didn't do so. I was hoping for another pop early today to do so because I have a half a position there. Anyhow, I didn't do that. Now I'm just 3 handles out of the money. And I want to tell you that, first of all, let me reiterate what Black said. I had said it several days ago. I'm looking for a counter trend move. I'm not looking to pick a high here, right? But I do see multiple signals that point to some kind of a short-term correction. The SPX, as you're seeing, for now is getting rejected from this ascending channel resistance. Same deal with the Nasdaq. And let's have a look at the Dow Jones, which yesterday at the close was testing this channel as well. Today it's going to open lower. So as you see, almost every US index was on a resistance. Also, don't forget, yesterday I mentioned the DAX specifically. I explicitly said that, listen, the move from the lows for the DAX was a bullish move, but keep in mind, be careful. This is a megaphone pattern and we're currently testing resistance. And actually, just a while after we said that, the index moved a little bit lower, and today, as you see, it's making another move lower again. I'm not implying that the DAX is going to turn bearish, but I'm saying that yesterday it was on resistance. It has a potential of moving lower from there, somewhat lower. I think a potential for another 100, 150 handles. It's quite easily achievable, even if that's like a short-term correction before moving to new highs from there. Obviously, the Nikkei is also moving lower. I have to say, though, that the Nikkei has broken no support yet. I mean, at the very minimum, we really want to see that high break to the downside, which is at 23,423, before we can even consider anything bearish having to do with the Nikkei. And we've seen, and this now has been a prolonged divergence, that the Nikkei has decoupled from the fate of the USD yen. So, just expecting it to roll over and die from here because we're seeing the USD yen move, if we were having this conversation several months ago, it would be self-evident, but it's not that much nowadays. Okay. Okay, so having said that, let's go at crude, because crude is also posting a very interesting move, and I have to tell you that now that we've hit my last target here, which was the 161.8 at 63.30, we're actually just above it. I'm running out of ideas having to do with, I mean, I can tell you where the next target is, because it's the long-term 50% fib of that move lower, which is at 66.87. But I have to tell you that, the only thing I can offer from this point on, because as you remember, we were expecting this kind of a move after the triangle, etc., is that you cannot really predict 100% when this last move is going to finish up. But I can tell you one thing for sure. I said it a few days ago as well. We are likely near a short-term top before a deeper correction. So don't get in love with crude at this point in time, because it's already too late in this trend. Okay, it needs a short-term breather before we can start looking at bullish target once again. So I don't care if it's going to turn down from here or a little bit higher. I know one thing for sure is that if somebody forced me to have a position right here, right now, and hold it, let's say, for a week, I would most likely choose to be short than long, okay? Or a couple of weeks in that matter, because a week is probably, a too short period of time. So obviously, until proven otherwise, it remains bullish, but it is overbought in most of the time frames. The bullish move is already overextended. It has met several targets we had, and as I said, don't fall in love with it here. Okay. Now, having to do with the Nordic currencies, I want to briefly show them, especially USD SEK, because Blake didn't, I know, Stelios talked to us about them. I'm still short 1/3 of my position in USD NOK because I had taken profits in the rest. I have to say that I was hoping the rebound would be, somewhat stronger, so I can add back another third of my position, but it never reached the target I would be looking for. Anyhow, this is the USD SEK. For me, a very important level is down at 807. You know, it remains bearish as long as you know, we remain below this broken trend line. Even if we see a stronger rebound from here, even towards 837, that's not going to change my mind. Same thing applies with the USD NOK. You know, I was hoping for a move towards the 821 area. That never happened. And we're resuming lower. I'm just holding 1/3 of my initial position from 829. But you know, I'm totally okay with that. Keep in mind that the 8 level is a very, very important support level. So the 8 area, because it's an area, let's say between 789 and 98 and 803. So keep in mind that we might get rejected, you know, once again from here. So obviously it remains bearish until proven otherwise, and I'm still actively looking to be selling more USD NOK on any decent bounce, because I honestly believe that in the longer term this has a lot of potential to move to the downside. Even if we go to the weekly chart, you can see from here that even a move down to the 38.2 of this move higher is at 754, 755, okay? And I really believe we're going to be going quite a lot lower from there. I do believe that, as Stelios said, that the monetary policy, that, you know, both the Norges Bank and you know, the Swedish Central Bank have been left quite behind in the curve. And while the US might be much closer to the end of a hiking cycle, having to do at least with distance to let's say equilibrium of rates, that definitely isn't the case with the Norges Bank. Okay, so I do believe that there is a very good long-term potential to the downside. You can even see this. I was viewing this as a corrective channel to the upside, and you know, a lot more potential here. So I'm a believer of this trade even in the long term. It's not just a short-term move. And you know, as I try to be very nimble when I'm trading counter trend, on the other hand, I really don't want to exit positions that I believe in the long term as well. If you remember, yesterday or the day before, I think Blake was reading to us some news that were in essence pointing that we might have like some NOK weakness, and I told him, no, I don't mind. I'm going to keep 1/3 of my position no matter what, and you know, I'm going to be looking to add to that. I wouldn't be doing that if I didn't believe that I'm in the right side of the market, even for a longer term perspective. Okay, so you know, you really need to learn to distinguish, you know, which trade you should be hanging on and which you would rather abandon rather easily. Okay, so for example, gold, that my long-term thesis is that it's going much higher from here. My long-term thesis, I repeat, not my short-term thesis. You know, that makes me a lot more fragile in, you know, taking profits, taking very small losses when I'm trying to trade it to the downside. Because, for example, if I was long gold for some reason and I believed that it had value in the short term from here, you know, I wouldn't let a short-term move, you know, knock me out at break even or with a little bit of profit or whatever. So, you know, for me, it's very important always doing a top-down analysis and also knowing, at least in my belief, where the, you know, the long-term move, the next long-term move is going to be, because I always feel much better knowing that, you know, I'm at the right direction. Let's have a look at a few questions. Oh, we have a lot of them. FTSE, yeah, sure. Since I spoke about everything else, yeah, there is no indication that FTSE is turning lower yet. That's why I didn't mention it. Just have a look at it. Obviously, there's no question the upside momentum is stalling. And if you go to lower time frames, you can also see in the FTSE that this is a decently looking ascending wedge. So I have to tell you that in no way I would be bullish in the short term up here. I see a very high probability of a move to at least retest the breakout area just below 7,600. Okay, so being bullish up here is in the short term is the wrong thesis. Okay, I do believe that also in the FTSE, most likely the next short-term move is going to be to the downside, but I also believe that that's going to be most likely a corrective move. You can see why here. So, you know, you're a short-term trader, you have a very good reward to risk ratio to try your luck, you know, for a move down to here. You are a longer-term trader, you know, wait for the dip and buy it. That's what I think about it. Okay. Thoughts on Aussie USD, which thank you for reminding me about the Aussie. There is one more thing that troubles me about the Aussie, and that's why I'm thinking of taking like minimum profits. And since I already have exposure being short the Aussie yen, the Kiwi yen, and they're working very nicely, just abandoning that position simply because of this. This is copper, right? So what do you see here? You see this? Yeah. I mean, I've said, and I've been tracking copper, you know, quite extensively. I haven't traded it, but I take it very seriously into account for other things. So, you know, it's a series of impulsive move highs and corrective moves lower, right? Moves lower, sorry. So I see the same thing once again here. I mean, if this isn't an impulsive move higher, and this a corrective move lower, I really don't know how a textbook move higher and a bull flag look. Because in all honesty, in the markets, anything can happen. It might crash from here. But statistically speaking, this is as good as a bull flag can be looking. I mean, if I wanted to, now that we're making some, you know, educational videos for the ForexAnalytix video store, you know, speaking about bull flags, and poles and bull flags, honestly, I can't think of much better examples than this one. So can it break lower from here? Sure it can. But from my experience, what percentage, what probability would I give to that? A low one. Okay. So if you're asking me, where's the next move in copper going to be? Most likely higher. And we all know how well correlated that is with the Aussie, right? So that's also one of the reasons I just want to bail out the Aussie and keep the positions that are actually working for me. You know, one of the good things in having more than one positions at the same time, which I usually try to do, is that, you know, it psychologically also makes it much easier for you to just, you know, objectively say to yourself, okay, this is working nicely. Sure. You know, let's hold to it. Let's even leverage on it. I mean, leverage not in the sense that increasing your leverage, but perhaps increasing your initial position or whatever. Is the other thing working as I intended it to do? No, I would have liked it to accelerate lower, you know, much faster or whatever else. Okay, sure. Yeah, let's get out at break even or with a little bit of profit or with a little bit of a loss and keep riding whatever is working, right? So, you know, that's the story here. This is a textbook bull flag. Of course, as any corrective move, it can evolve a little bit longer, do something like this, right? But it will still remain a bull flag. I mean, it can evolve, even if you want to see it from an Elliott wave perspective, it can evolve, let's say, to a double zigzag or whatever. You can see this corrective move here. Initially, you had here every reason to believe that perhaps that was the correction, that bull flag. And then here, initially, that worked as a bull trap. And then we moved lower, and a lot of people were trapped believing that actually copper is breaking. But, you know, if you remember, I was reiterating that I still see no invalidation of the bullish case scenario. and then we found support where we expected to find support in one of the areas we were expecting that might provide support. And look at what happened then. We got like a, what was that? Like a 15-day move higher, like something incredible. And this is a bull flag. Okay, as simple as that. So keep that in mind with whatever is correlated with copper, and quite a lot of things are. And you know, that's my viewpoint about it. So let's have a look at the pound yen, because we have a question about the pound yen as well. Okay, the pound yen is bearish in the short term, and I repeat, I'm talking about the short term, because you can view this with the blue intermittent trend lines as a wedge kind of formation. We're breaking lower with, you know, very strong momentum, but I have to tell you something. That opens up the door for a stronger bearish move. But unless we invalidate this breakout from this triangle, you know, I cannot turn bearish like in the medium term, right? So sure, it looks good, and in the short term, selling rallies, for example, to 152, if you get lucky and you get that, so something like this, is a good idea, but I wouldn't marry this trade, you know what I mean? So one leg lower at least after a rebound, yeah, absolutely, looks very good. More than that, I would be very skeptical. Okay. No worries, Abdul. My pleasure. Sorry, I'm going through some questions to make sure. Rafael says, Steve convinced me to change my trading style in favor of longer time frames. I've been trading too much noise on lower time frames until now. I hope that works for you, Rafael. I know it works for me, but that doesn't mean that it will work for you. Personally, in the way I view things, it takes a lot of the stress to trade on longer time frames. So you won't find me disagreeing with that. If you make it work for you, I'm going to be very happy. Do you think there is a correlation between metals and US dollar ratio? US dollar ratio? You want to explain what you mean by the US dollars? I've always read in many articles that once gold exceeds 13.4 ratio to the DXY, you mean, so probably you mean a metals ratio to the DXY. Just confirm that to me. Because, you know, there are more dollar indexes. Probably you mean the DXY. Yeah, okay. Any metal over the DXY ratio. Listen, the metals that we're viewing are denominated in dollars, right? I mean, when we say gold, we usually don't check at the gold over the euro, and you know, we check like the XAU USD, the XAG USD, etc. So obviously, it plays a role, because whenever we get dollar moves that are broad-based, obviously a broad-based move lower for the dollar will favor metals to the upside, and the complete opposite. Now, having to do with a specific ratio, you're mentioning that I've always read in many articles that once gold exceeds 13.4 ratio, happens what? That's in a sense the bull bear line, or that means that it's overbought? Because you didn't finish your thought, my friend. Mazed is I don't want to butcher your name. Mazed. I haven't checked though the ratio. I mean, you know, for me, it doesn't say too much. You know what I mean? I like to judge charts as they are. So, for example, if I see a bullish picture in gold, I really don't care so much what its ratio towards gold is. Towards the DXY is. You know, I do technical analysis on the gold chart. But when the ratio exceeds 13, all metals start to rally. Okay. So in a sense, you mean that 13.4 is like the bull bear line. Once we go over it, it shows that metals are quite on a bullish mode, right? Okay. I haven't read that. I haven't seen it. But you know something? I'm going to check it out later. I mean, I'm going to make the ratio later and actually check how much that is valid. And I'm going to let you know tomorrow, actually. Okay. Okay. Thank you. I'm honestly going to check it after the webinar is over. You know, we learn something new every day. You know, why not? You know, I take everything I read with a pinch of salt. I usually like to back test it myself, but thank you. Okay, so do we have an interview today, Dale?
Yes, very timely one. Kirk Spano is with us to talk about what's happening in Iran.
Oh, that's going to be very interesting. I'm going to be listening in. Actually, there's no question about it.
You've got a lot to do. You know, you're learning. You have a back test to do on a new theory, watching an interview, pushing out alerts. You're a Renaissance man.
Thank you. By the way, let me show one more chart. This is the CAD yen. Okay, first of all, I can already feel a lot of people, you know, whispering double top here, right? I mean, there is no surprise. In essence, we have created a double top, but I need to, you know, to just warn a little bit caution, because this move lower, in my opinion, was corrective, right? So I know that, as in many, and I want to stress this out, you know, candlesticks are quite good in indicating turns. This is another yen pair that formed an evening star formation, and you can see the extremely strong follow through we're getting today. Having said that, I would be skeptical about this being a double top, because I'm seeing a strong move higher and a corrective move lower. So I do believe that any rebound should be sold in the short term. So my view is more or less the same with the pound yen. Like, likely has another leg lower, but if we're talking about the longer term, be cautious. Okay. Oh yeah, and let me cover these questions as well. We had a question about the Euro Aussie and the Euro Kiwi turning, and also the same about Pound Aussie and Pound Kiwi. So let me briefly go over those, and you know, then I'll pass it to you for the interview. Euro Aussie, too early to say, but we have a morning star formation forming here, right on extremely important support. So, is this enough to turn you bullish the Euro Aussie? No. Is this enough to warn that perhaps we found a low? Yes. Why? Because that happened from a very important area. Okay. So, I do like this as a reversal area. I need more confirmation. So let's begin by seeing how the daily candle closes today. So that's all I have to say about the Euro Aussie. Euro Kiwi, look where it's trying to find a low. Ascending channel support, trying to form a hammer after another pin bar. Same deal. Too early to say, but it's a lovely area to turn higher. Let's wait for more price action. Okay. Pound Aussie. Still riding this broken triangle's resistance as support. I have to warn you here, I don't like the short-term price action, because it looks more like a consolidation that wants to break to the downside. I mean, from my experience, these kind of consolidations usually break to the downside, right? But it can also be a bottoming formation. It doesn't look as good as the attempt of the Euros in the Euro Kiwi to turn. I have to tell you that much. Okay, so Pound Aussie, although it hasn't broken a very important trend line to the downside, personally, my gut feeling, you know, and my experience watching charts, you know, gets me more cautious than I would be the Euro Aussie, for example. But I have to tell you that I'm not ready to take a position in either of them now. Pound Kiwi just tested very important, the broken triangle resistance. You can see how important this trend line has been to the market. Resistance there, resistance for a period of time there. We came down, back tested it after we broke out here. Now we're testing it once again. So, you know, it looks very heavy still, but pay attention to this area. Might produce something, but too early to say. Okay, I need more price action. I'm just telling you, this would be a great area for the pair to find the bottom. I'm not seeing a bottom though, just by looking at the chart. Because if I simply remove this trend line and you ask me what the hell is this move, I'm going to tell you, oh, it's still heavy, probably it's moving, you know, it has more downside. Okay, so don't jump the gun, especially on the pound crosses. Okay, it's better to wait for more price action, get confirmation, and lose, you know, in essence, you exchange a few of the potential profits to increase the probability of the trade working for you. In my point of view, a worthwhile trade-off. Okay. Okay, thank you, Dale. Dale? Dale?
Here I am, Steve.
Okay.
So, Steve, after listening to you today, I now know why you gravitated towards candlesticks. And it may be a throwback to your bachelor days, but you said you only care about the body. So now I know why you. Now I know why.
Oh my God! Body. You know something? First of all, this is the most mistaken thesis ever made about me. You know, I always cared first about the face, because you know.
And look at what you're in right now. And you still care about face.
Oh, absolutely. Absolutely.
Okay.
Absolutely.
Anyway.
But you know something? A beautiful face is not something that you can easily fix, while, you know, any person can work on their body, right?
Okay. All right. Well, you know, we'll put some plastic surgeons out of business. So thank you. Thank you, brother. Nice analysis. And I'm going to pass at least a microphone over to Kirk Spano so we could find out what his thoughts are on the ground in Iran. He predicted a lot of these things that are happening, so really a pleasure and great timing to have you with us, Kirk. Waiting to hear your voice.
Hey, can you hear me, Dale?
Yeah, Kirk, how are you, buddy? Happy New Year.
I'm good. I'm good.
Happy New Year. Can you hear me?
Yeah, Happy New Year to you too. I was enjoying the conversation about pretty faces, nice bodies, and candlesticks.
Yeah, it kind of sounds like what we were talking about yesterday afternoon. So,
yeah, right.
Yeah,
right.
You know, first of all, Kirk, I'd like to acknowledge that, you know, way ahead of the curve you were with things beginning to percolate in Iran. You talked about the potential of some type of conflict well before President Trump decertified the deal, and I think there's another deadline looming about that. But this is something new that has generated on the ground, unlike other protests and unrest on the streets that mainly happen with the elite in Tehran. This is happening countrywide, the whole nation, more from the working class people, kind of like a nationalistic, they're fed up. So you told me that you wrote a piece, and it's entitled, I believe, "The End of the Ayatollahs." So I'd be interested in, you know, where your head is at, where we're at in this process, how long do you expect this to take place, and then last of all, could the revolution be a reason for Iran to want to get into a shooting war? It's one way to distract the population from, you know, their standard of living, when the enemy of my enemy is my friend.
Right, right. Okay, so first
mouthful,
off,
buddy. Mouthful.
Yeah, it's a lot. That's a lot of stuff, but it's organizable.
Okay.
First off, am I able to share my screen at all?
Oh yeah, see, I wasn't sure because you said you were going to do it on the phone. I'm going to give you the screen, definitely. Hold on a second.
All right. I'll just pop up the series of articles that I wrote.
Okay. Here you go. Here's the screen share.
All right. Show my screen. And I think this should do it.
Yeah, we got it.
You see that? Okay.
Okay, so this was last fall.
Yeah, so, I've been on the oil markets, obviously, in the Middle East for a long time. I actually started studying the Middle East in the late 80s, early 90s. So I've been, and as a formative experience, I was a kid when the whole Iranian Revolution, the Islamic Revolution occurred. And I remember, the hostages and everything else. So in college, I studied the Middle East, particularly with Iran, because Iran has an actually a wonderful history.
Oh yeah, the Persian Empire, unbelievable.
Yeah, and even more recently than that. But the Islamic Revolution.
They were Aryans.
Right, right. So anybody he liked, right? But the reality in the last, I guess it would be 47 years now, is that the United States has wanted to get rid of the Ayatollahs, the Ayatollah and the mullahs. And I think under President Trump, that's one of his primary goals. He hates what's going on over there. I think he actually understands that for there to be stability in the Middle East, you have to get rid of some of the non-secular, some of the religious motivations. And in my opinion, a lot of the religious motivations are just shields and tools for controlling wealth and controlling people. So what's new about this uprising in Iran is that, as I predicted, the people are getting tired of the religious authoritarianism, and that's really what it is. It's authoritarianism. So,
Kirk, it's one of the reasons. I have a little awareness of the country that they have a very young population,
right?
They can't drink, but they could travel a few hours to go to different resorts and live more of a Western lifestyle. So, is the demographic really kind of the catalyst that's making this happen now?
It is clearly part of the reason, right? So they have, because of technology, we overlook how pervasive technology is at this point because it's become so normal to us. But if you're in Iran or China or anywhere where there's an authoritarian tilt, and you want to get information from the outside world, it's much easier to do today than 20, 30 years ago. So the repression of ideas is incredibly hard now.
Right, great point.
And the younger people see the way people live in Europe or the United States or Canada and other parts of the world, and they go, well, why can't we do that? Why can't I walk down the street and hold my girl's hand? And they are getting to the point where, this is the first time that they've actually not just asked for reforms, right? This wasn't just economic. It was spurred by some economic complaints. Interestingly, not from folks in the city who are usually the ones that step up, but in the countryside and at the edges, people saying, hey, financially we're not doing so well, economically we're not doing so well, what's going on? And that morphed into a broader sense of a broader type of protest, and there was actually calls for the Ayatollah to be gone. So we are at the front end of some major shifts, and if you take a look at Saudi Arabia, they sort of are leading this with Prince bin Salman, Mohammed bin Salman, who I wrote an article somewhere in here. If you go to my Seeking Alpha page, I've got quite a bit out there. But I talked about, they call him Prince MBS. Yeah, they call him Prince MBS. I thought he was going to be Man of the Year. So, you know, the person of the year, and the movement was you know, the anti-sexual abuse movement came in for person of the year. But you know, Prince Mohammed bin Salman's changing the world, and you know, I don't think people should overlook that. He has in Saudi Arabia allowed women to drive, and he's allowing women into the workplace, and he's making it a more secular, less religious place. He's getting rid of the enforcement squads, and I think that these Wahhabi schools are real close to being gone. So he's changing things in Saudi Arabia, which is also young, and people in Iran are taking notice. So I would think that the folks in Iran and the folks in Saudi Arabia, they might find a newfound détente, at least, because they have a lot of things in common at the generational level. It's some of the old folks who have been the problem. And when in history have the old folks been the problem?
The youth of Saudi Arabia, Kirk, the youth of Saudi Arabia and the youth in Iran don't care if you're a Shiite or a Sunni. They see it more as a generational bond that they have. And it's the older generation that makes a religious distinction.
Right. It's definitely moving in that direction. I mean, you can't paint it with too general a brush, but it's clear that it's moving in that generation, in that direction. So what does that mean to us as investors and as citizens of the world? Well, the first thing it should mean to us as citizens of the world is that we ought to support this move if we have any brains, because for whatever it is, 1,400 years, that part of the world has just been on fire. And at some point, the weapons get so big. You know, we've got North Korea with nuclear weapons, and the reality is that Iran is a baby step away from having them if they want. You know, and chemical weapons and biological weapons and terrorist networks. Yeah, we have to get by this at some point, and the speculation and the planning has been for a very long time, because I was reading about it in the early 90s, that you want to have a conflict, because they're not going to decide just to change, especially from the top down. Now, from the bottom up, what they want is change, but from the top down, they don't. So, unfortunately, the people at the top, the Ayatollah, the mullahs, they control the military. So you have to get an uprising, and it has to be supported from the outside, which is what I've said all along, is that at some point, Israel, the United States, have to step up and help the folks in Iran. Saudi Arabia has to have some sort of conciliatory role. Russia's going to want to have a role. And I have openly said I think Russia will take a step back before they take a step up if there's a conflict within or with Iran. And I think the shooting war is a two-level thing. I don't think you see an invasion by Israel or the United States. I think what you see is support for an uprising. So if these uprisings continue, you know, you could see the United States and Israel target, you know, the Iranian National Guard and disable them, allowing the protests to take a more absolute form where they overthrow the Ayatollah and the mullahs and, you know, potentially kill them, for sure replace the government. So I think that the day is coming.
You really think the Ayatollah and the Revolutionary Guard are going to stand by and let this alliance basically, you know, create a regime change without being aggressive and just letting it happen? So is it possible that by supporting the uprising, that's what leads to a shooting war?
Yeah, I think absolutely, right?
Okay.
So, you know, the Revolutionary Guard is throughout the Middle East at this point. They're very stretched. The United States and Israel, our military is so strong and so fast. Yeah, and I don't think people understand the fast part of it. Our ability to have strikes quickly You know, it's not like we have to go out and do intelligence brand new. Oh, hey, I heard the Iranians are a problem. Let's do some intelligence. We know where almost all of their people and resources are right now. So if the day comes where we want to fire 1,000 missiles and have sorties of jets flying and Black Hawk helicopters, it's not a thing that is going to take long to prepare. And I will tell you, I know for certain that there have been orders since July to prepare for this conflict. So the United States military and Israel is always prepared, but the United States military has been preparing for this.
How do you know that since July?
I hang out on the East Coast with some people who know some people.
Okay. You're like Deep Throat in space. All right, go ahead.
You know, they can't discuss their specific missions, but they can tell you what part of the world they're going to, and it's not hard to figure out from there, right?
Yeah, I'll tell you, Majid Mazat in here says he's from the Middle East and up to date with the politics, and what you wrote is 100% true. So for people that are on the ground there, they're giving you a thumbs up on your interpretation of what's happening here in our community.
Yeah, so the article that I'm writing today should be out tomorrow, is titled The Brutal End of the Ayatollah. Something along those lines. I'll probably throw the word recession in, because by extension of what's coming, we're going to probably get higher oil prices, which we've talked about before.
Right.
Higher oil prices.
How high during the uprising, and if it's going to take the shooting war, the market's already starting to put in some risk premium, don't you think now,
right.
Kurt?
Yeah.
So, go ahead.
Yeah, and you know, I wrote this article with a little bit of your help.
Okay,
oil's technical path to $80. I think that's a done deal. I think that we will see $80 quite possibly by summertime, even without an expanded conflict. I mean, we may see things simmer here for a year or two, but what we talked about in the last interview is I said that I think springtime is a very likely time for something to happen. And with what just happened over the new year, that's starting to look like it might be right. So we'll see. But even the simmering adds to the price of oil heading towards 80, which makes the cash flow of some of the oil companies I've talked about remarkable, right? They go, because they spent 4 years now, 3-4 years now getting lean because of the pressure. And now all of a sudden they're going to get $80 oil again. You know, you take a look at some of the companies I'm going to be in, I mean, their cash flows are going to be just enormous. So if there's an actual war that displaces supply in the Middle East, you know, you've got certain analysts, you know, guys who sensationally sell investment letters. And I have an investment letter. I don't hype when I talk about things. I just try to make sense to people. I don't think we're going to see oil at $300 or $400 or $500 a barrel, which is what some of the other idiots, you know, are saying. Could we see $120, $130, $140 oil for a year or two? Absolutely. If we knock 2 or 3 million barrels a day offline because we blow up some pipelines, some infrastructure, you know, then that has to be rebuilt. It takes a few years, but it's Western companies coming in there to rebuild. You know, the French can say whatever they want, but about us being aggressive, but the reality is that Total goes in there and cuts deals. So, you know, they can have their opinion about, oh, the United States is being aggressive. You know what? The Ayatollah has been aggressive for a very long time. He has to go. And I just don't even like to argue the point anymore. Anybody who doesn't think the Ayatollah has to go just doesn't understand the roots of most of the terrorist conflict and threat that's gone on for the last 40 years. So let's just presume that's going to happen. You get some verbal pushback from Europe, but then they turn around and send Royal Dutch Shell and Total into Iran to rebuild everything. They get money out of the deal. Our oil companies make money on the deal. The Iranian people have a better life. You know, there's just not much downside other than the fact that obviously people will die. And, you know, I hate to say that at some point we have to accept the costs of beneficial revolution, but at some point we have to accept the costs of beneficial revolution. We had one here. So I think that the day is coming in Iran. I have friends who are dissidents. I just can't see things progressing slower than they have. I think it's going to accelerate, and at some point, at a minimum, you get a risk premium, and more likely than not, you get a little bit of infrastructure blown up. And I'll just come out and call a spade a spade. I'm sure we'll do it on purpose, or the Israelis or Russians. Somebody will do it on purpose, you know, because they know that the price of oil going higher is good for Russia, the United States, and Israel in the short term. It will cause a recession. There's no doubt about that either. But in the short term, there are some interests that are very pro more expensive oil. In the long run, and I was just on television.
I mean, look how many wars have actually, that's been the catalyst.
Yeah, absolutely. And I'm not saying it's ethical. I'm just saying it is.
Right.
And, you know, I get yelled at and called a warmonger. I'm not a warmonger. I'm an analyst. I'm just saying this is the way it's probably going to go. And, you know, you have to separate your ideology and emotions from this analysis. So ultimately, you know, I did talk about the rise of electric vehicles and a smart grid and alternative energy. Higher oil prices will spur that on, right? So we'll go through this period of higher oil prices, recession, and then people will say, hey, maybe now that the EV technology is better, the solar technology is better, and as they build out a smarter grid, you know, I want to be involved in that. So if you look at all of these things over 20 and 30 years rather than 20 and 30 minutes, you can see that there is a flow here. And there are certain catalysts around the world. The rise of technology, a more secular society, China becoming more mature, India, which is a young economy, accelerating. Take a look at these big macro pictures, and you can figure out that, hey, there are a lot of good things going on. You know, I do have an article where I think the link is right in here. So last year I had a blowout year. You know, made a good return, 48%.
Nice. Congratulations, Kurt.
Yeah, no, it's, you know, you like to have those years. Somewhere in this article, I have a link to, I don't know, it's in here somewhere. I have a strategy called Core 4, and it's how I do things. And how I do things, maybe it might be in the blog posts. Yeah, here's how I beat. Yeah, there you go. You know, as a writer and a publisher, you got to write some clever titles. So, you know, I have this Core 4 investing method, and it's a pretty simple thing. Is you take a look at the big macro picture, and you figure out, okay, the big macro, and you guys are currency traders, so you do this all the time. You take a look at the macro picture, and you say, okay, these are the galaxies I want to play in. Then you figure out what the governments and the central banks are doing. In this case, we have government action. Then, by extension, if we know an Iran war is coming, we can start picking out companies and investments. And then finally, as you talked about with your last guest, we figure out what the price trends are, right? Because while our analysis can be pretty accurate, precision is remarkably hard, right? We can get the big picture right, but getting the trade right is really hard. And that's where the price trend following, in technical analysis, quant, and I use quant, you figure it out from there. So I'm just trying to throw out to, in your group's case, traders, you should be looking at some of these catalysts and saying, okay, I know what way the big picture is going. So I can trade within this little galaxy, big galaxy, because it is very impactful. And I know that there's a flow, there's a tailwind at my back. So even if I goof up a trade, I might get, you know, partially or fully bailed out just because I was going with the flow to begin with.
Great point. That's
and I think, right, you know, I mean, why would you trade against the market unless you're really trying to hit a home run? You know, I'm about risk management. You know, my service is called margin of safety investing, and I made 48% with 31% in cash last year. So, you know, my risk adjusted return, I don't even know what that turns into, but you try to manage risk by understanding all these things. And folks who don't understand that there is another, you know, it won't be an Arab Spring because the Iranians aren't Arab, but there's another spring coming in the Middle East, and it'll be better than the last one. Could it be more violent? I think it could be. That's what I'm writing about today for publication tomorrow. But the opportunity for an investor who's willing to be an analyst and be emotionally controlled in these trades, you know, you can make a ton of money. I made 48% on the retail side. You know how hard it is to make 48% on the retail side? Because I can't take the level of risk or the, you know, the concentration that normally is required to do that. So, you know, you guys can take some more risk, you know, especially through concentration of your trades, and make a lot more money. You know, for example, I own leaps on several oil stocks.
You think there's an outcome for the dollar, since that's our wheelhouse? I've had people on that said that, you know, it's possible that the Saudis de-link from the petrocurrency, but in your scenario, it sounds like we're solidifying the alliance rather than the other way. So do you have a view on the dollar with this going on?
Okay, so the petrodollar is something that I focused on for a few years since I was at MarketWatch. And I believe that the dollar will be the strongest currency on average for the rest of my life. No other nation has our combination of economic diversity, global diplomatic reach, military strength. You know, the dollar deserves to be the strongest currency on the planet. We have devalued it by borrowing, and that is the only thing that has kept the dollar from being as strong as, say, the Swiss franc. What's coming is that Saudi Arabia won't completely get rid of the petrodollar, but they are going to allow the Chinese to start trading more oil in dollars, or excuse me, in yuan.
Yeah.
But the thing is do people really start to trust China as much as the United States? Maybe over 20, 30, 40 years, but it's not going to be quick. So the dollar is going to have this range that it trades in, and it's not going to crash. It's not going to be, who's that guy that runs around selling books about the end of the dollar?
John Rubino?
No, the Rickards.
Oh, Jim Rickards, yes.
Yeah. And I get what he's talking about, but some people who have an opinion and then form their evidence around the opinion usually miss something. And what people who are dollar bears miss is that the dollar will go through bearish trends. Don't get me wrong. There's a lack of confidence. Yeah, there's a lack of confidence in President Trump, rightly or wrongly. I'm not going to talk about that, but the dollar is getting beat up a little bit. The reality is that on average, over a long period of time, the dollar will be very strong. If I'm right, and I think that there's possibility I am, I think the dollar goes in the direction of being very strong 7, 8, 9, 10, 12 years out. There's going to be another huge dollar rally, and Jim Rogers has talked about this, and maybe it might be sooner. We'll get a spike if there's a conflict. We'll get that must mean the market's open. We'll get a spike on conflict, right? People will have their flight to safety. But eventually, I think the United States can become a gigantic Switzerland when it comes to currency. And in the long run, that will be important as the global economy matures even further. That's a long process, right? So the glide path will be choppy early and then upwards after that. So for traders, maybe for years and years, they can trade the dollar and just make a ton of money. You have to understand the pivot points of what you're working against, but then understand that the long-term trend is up. The dollar will be the strongest currency on the planet for a very, very long time on average. However, it'll have a range and it'll be tradable. So, you know, go ahead and trade it, but just understand that your bullish trades have more of a likelihood of getting bailed out than your bearish trades.
Okay, Kirk. What a great interview, and thank you so much. I know you're on vacation for you know, coming in today, and you know.
I'm not on vacation. I just I just spent a little bit of time of organizing my personal life over the holidays.
Oh,
but
my God. You know, yeah, you have to do that too. I mean, you investing what we do, not who we are, right? So, okay, I really appreciate it, Kirk. Eye-opening again, and I have to tip my hat to you that you had a pulse and insight into what was going to happen before things started percolating on the oven. So appreciate you edifying our community, buddy. And
yeah, thanks a lot. And if folks can jump out there and check out the articles that I have at Seeking Alpha, you know,
okay.
I always appreciate the you know, follow me on Seeking Alpha.
Right.
I know you follow me, and we follow each other over there on Twitter.
Right.
If you follow me at Seeking Alpha on Twitter, we're good.
Yeah. At Kirk Spano. Follow him so that you have your finger on the pulse of what's happening in the Middle East. You're my go-to guy in the Middle East, Kirk, and I appreciate your time today. Happy New Year.
Take it easy, Dale.
All right,
Happy New Year.
All right. That's
Bye-bye.
it, Face. Thank you, Patricia, Luca. See everyone tomorrow. Good hunting the rest of the days. Maybe I'll see you guys in the other chat room. Remember, great deals on the subscriptions. You only have till, I believe, Sunday or Monday. So see everyone tomorrow. Good hunting, and most of all, don't just count your pips, count your blessings. And I count being able to collaborate with you and the team as a big blessing in my own life. So thank you. See everyone tomorrow. Thank you, Kirk.
Take care.